Chancellor of the Exchequer Philip Hammond has today unveiled his second budget of the year, as per his new timeline of a full budget in the autumn and an update in the spring. Once you hear that the FTSE 100, benchmark 10-year government bond, or gilt, and the pound were all pretty much unmoved by the hour-long statement, then you can guess that the budget featured few sweeping policy changes, although it did feature new initiatives on topics ranging from electric vehicles to fire safety, to investment in the north, to house building, and the mess that is the convoluted international tax system. There are, however, 6 key points of which you need to be aware from a personal finance perspective. They are: the personal income tax allowance will rise to £11,850 for fiscal 2018-19 for everywhere in the UK except Scotland, which will set its own threshold and its own budget on the 14th of December. The higher rate income tax threshold will rise to £46,350 for fiscal 2018-19, though again not for Scotland. First-time buyers are to be exempt from paying stamp duty on property valued at up to £300,000 from today, although this won't apply to any purchase where the total value exceeds £500,000. The pensions lifetime allowance will be £1.03 million for 2018-19, rising in line with the consumer price index as previously stated. The junior ISA limit will rise to £4,260 for 2018-19, while the overall ISA limit will stay at £20,000, of which £4,000 can be paid into a LISA for those who are eligible, and there are no changes to the annual allowance, tapered annual allowance or money purchase annual allowance when it comes to pensions. From an investment perspective, the financial markets were again largely unmoved, although certain sectors and stocks did see some activity. To look at the stock market first, when Mr. Hammond stood up, the FTSE 100 was trading at 74.48. An hour later, when he'd finished, it was almost exactly unchanged. The only real movers looked to have been the house builders. Barratt, Persimmon, Taylor Wimpey and Barclay sank to the bottom of the FTSE 100 in terms of their daily moves, with drops of between 1% and 3%. This may reflect some disappointment with the structure of the Chancellor's £44 billion housing package, the absence of an extension to the Help to Buy scheme, and the launch of an investigation into the pace at which permitted land actually sees houses built. That could be, and I stress only could be, a tacit accusation that the house builders are hoarding land, and such thoughts did knock shares in MJ Gleeson, for example. Estate agents such as Foxtons and Countrywide were up amid hopes for fresh activity amongst first-time house buyers. Cider specialist C&C Group was unchanged, despite the levy or increased levy on strong white ciders, as was alcohol retailer Conviviality. The latter was perhaps helped by the absence of any fresh increases on duty across other spirits, wines and beers. Even the Chancellor's initiative to improve fire safety work following the awful events at the Grenfell Tower saw little movement in the share prices of specialists in this field, such as the AIM-quoted stocks Marlowe and Premier Technical Services. Now to turn to bonds, the yield on the benchmark UK 10-year government bond, or gilt, that's barely flinched. It stayed between 1.28 and 1.29%, as bond vigilantes have welcomed the Chancellor's ongoing determination to reduce the annual deficit and rein in the aggregate deficit, at least on a percentage of GDP basis. Finally, the currency markets also took the budget in their stride. The pound largely shrugged off a downgrade to the Office for Budget Responsibility's GDP growth forecast for the next 3 to 4 years. Sterling ended the speech largely unchanged against the euro, just below 1.13, and an initial tumble against the dollar proved short-lived as sterling rallied to reach $1.3275. Thank you for watching, and I look forward to seeing you next time.